Good morning, everybody. Welcome to the Flow Show. It's Tuesday, 28th of October, and we've got Trump over in Japan making waves and noise and everything else going on. Seeing some moves in dollar yen. The old Takaichi top has held out, and it's marked a significant potential double top. We're now trading below 152, so lots of stuff going on, which we'll get stuck into as always. Morning, Kate.
Morning, Ryan. Morning, Ryan. Morning, everybody. Yeah, Trump did a bit of a Roy Orbison there. Yeah, he told Takaichi that she could get anything you want. And ladies and gentlemen, it is our host Ryan Littlestone's birthday today. So happy birthday, Ryan! Please join me, everybody, in wishing Ryan a happy birthday today.
Oh, thank you very much, mate. Thank you very much. They don't tend to count much when you get to this age. I'm sure you well know as well. But anyway, thank you for the sentiments. Nice to hear them. Right, yes, let's see what's going on. First of all, though, why don't you treat yourself to a little present and get yourself 30% off a trader funding program plan. Use code SPOOKY30, our Halloween sale, which will end the 2nd of November. All plans, instant funding and assessment plans have that discount. So be quick, get in there. Some volatility going on in markets still that you can take advantage in this big week. So get on board with that. Thank you, everybody, in the old comments. Right, let's get cracking on what's been going on. Going to start over in China. The Forex regulator head says they are going to roll out policies to facilitate trade in the near future, according to Xinhua News. They've officially released the details of all their plenum decisions, which they've sort of already released anyway, but I'll just run through them because there's one key line within that. They're going to drive reasonable economic growth in the next 5 years. They're going to improve the level of tech reliance or tech self-reliance. They say they face difficult challenges in the global trade order. Wonder who they're pointing to with that. Says economic growth remains within a reasonable range. They vow to strengthen national security barriers. And they're going to give full play to the role of proactive fiscal policy and to vigorously boost consumption. And then they said they are going to increase their international influence significantly by 2035. So a couple of comments in there, a few comments in there, giving the nod to certain factors happening around the world, namely driven by the orange one. So they put a little bit of a slant on those details anyway, but that last comment to increase international influence significantly by 2035 is probably the one everyone's going to need to pay attention to, because we know their influence both above and below the table is strong in the world. So Takaichi and Trump had their meeting. Takaichi said Trump is a key force for peace and that the alliance with the US is the greatest. He also praised Trump's dynamic diplomacy and historic Middle East deal and credited Trump for making the world more peaceful in such a short amount of time. Also expressed the appreciation for Trump's friendship with the late PM Abe. So a lot of buttering up there. Certainly seems to be getting off on the right foot in terms of that relationship versus her predecessor, Ishiba. Trump also responded pretty much in kind, said the US-Japan alliance is at its strongest level and the US is Japan's ally at its strongest level. Says US-Japan relationship will grow stronger than ever. Takaichi is tough to negotiate with, but they have a good relationship. So it's all tickety-boo as far as that goes. We also had Finance Minister Katayama saying that she did not discuss monetary policy directly with Besant. Besant remarked that Takaichi's policy has sent a positive signal to markets. There were some texts released of the meeting between Besant and Katayama, where Besant has stressed the role of monetary policy in anchoring inflation and talking about exchange rate stability. Besant highlighted the importance of sound monetary policy and clear communication to anchor inflation expectations and curb exchange rate volatility. Later on, Katayama said that there's been no change to the US-Japan Forex joint statement, and that Besant's comments were general. Kay, just on that, nothing the FX front. Is that one of the reasons why we've seen the yen supported?
Yes, either way it is, right. We're seeing again a bit of a lost in translation between English and Japanese, where Katayama said nothing's changed, but the US text looks slightly different. We know they US doesn't want the yen to weaken further, but I think there's a couple of things that happen there. We see well, first of all, the meeting went pretty well. Funny thing is that Trump said that Takaichi is a tough negotiator, but she didn't negotiate. She did not negotiate the trade deal, did she? But yeah, I think a couple of things to note there is that we had a bit of setback as well in commodities, bit of a better relationship. Also, not yet because they signed this framework. There's talks about Toyota investing $10 billion, and what's the other one? There was a big one as well, going to invest a lot. And then we have also Japan Steel, but Takaichi nor Katayama really came out with the checkbook straight away on the table, right? Maybe that also has had a little bit of influence, and then yeah, the setback, just maybe a technical setback as well, from what you've been calling the Takaichi top. It could become an expression, this one, 153 and a quarter, but nice double high there right now in the dollar yen, and that's it's impacted most of the yen crosses. It's like a combination of a few things there coming together, which saw this setback in all yen pairs. Whether it'll last, that's another question. That line by, who is it, Kyochi, saying the weak yen will be countered by economic measures. That's not something that is going to prop up the yen if you spend more money. So I'm a little in doubt if it will continue or not. I've reduced my euro yen as I usually do, but I'm actually starting to think that another 50-60 points below here may be going to add again. I'm not sure it'll last, this yen recovery, but again, I think we need to be selective. The dollar is one thing because we are ahead of FOMC, etc. If they cut rates, there may be already something there. US cutting rates, interest rate differential a bit tighter. Maybe that has to do with it as well. It's a bit of a combination of factors. But on the crosser side, it may still be a bit different.
Yeah, there's lots of things in the mix. Obviously got the Bank of Japan as well coming up, and never know what they may say. So yeah, I'm not reading too much into this at the moment. Just the fact that 153.25, 26 top is pretty solid for some reason. That's as plain as the nose on our faces. So that's going to be a big level if we ever look to break it. So we had. He's not the economy minister, he's the economic revitalisation minister. They seem to have created a new economic ministry post for him. He said, there's yen weakness has mixed impact, and that the government is to scrutinise the FX impact and address the rising cost of living with new economic measures. A weak yen could weigh on household purchasing power, and the pain from a weak yen can be addressed by the economic package. We'll maintain fiscal discipline and monitor the yen's impact. So they're going to be all over that. Right, moving on. Over in the UK, the Bank of England and certainly Reeves has had a little bit of good news. The BR C, shop price index, basically measuring prices in retailers, came in at 1% year on year versus an estimate of 1.6%. Let's see if it's in the calendar here. Where are we? Should be overnight. There we go. Down from a prior 1.4%. But the bigger news was that food prices dropped 0.4%, which was the biggest monthly fall since DEC 2020, although fresh food costs continue to rise. A lot of that drop, though, in those food prices put down to sugar prices coming down a big chunk as well. So anyway, a little bit of perhaps temporary good news for the BOE and Reeves. What's not good news for Reeves is that apparently the OBR are set to downgrade the UK's productivity by 0.3%, which basically means that the economy is going to suffer by that amount, which means that Reeves has to, there's a number that's associated for Reeves in terms of how much that works out to, roughly 20 billion hit to the UK public finances on that productivity forecast dip. That means she has potentially a bigger black hole to dig herself out of come the budget. But this stuff from the OBR, it's not publicly released. This is stuff that they produce week after week after week, different numbers that they give to the Treasury for them to make their decisions on, but it will get leaked at some point by someone. Already the FT is touting the leak, such a leak of what it's going to do. The market, we've seen the pound weakening a bit, particularly versus the euro, and I think the market is now getting a bit into budget mode, shall we say, because this drop in productivity, if it comes, going to mean that, and I was talking this with Mr. Brown earlier, we could be getting up to 30, 40 billion is the number she's going to look to recoup. That's the budget black hole plus some headroom on top. So anywhere between probably 30 and 50 billion is going to be the number in the market's eye. It could be a case that she's dropping out these little hints, see how the market takes it, or get all the bad news out early, and then maybe she can put a bit of a positive spin on it at the budget. She's also been still blaming Brexit, which is a complete load of hogwash, saying that it costs too much to trade with the EU and that's pushing up inflation. She's over in the Middle East as well, and she even blamed the banking crisis way back, probably before she was even born. She's a stupid woman. So she's laying the blame on everything else except what she's doing. But as I say, the pound is not looking the best at the moment, and we could be getting into budget trading mode. Kay, you had that break in euro sterling. We thought maybe the market had priced everything, but perhaps it hasn't.
No, well, it's gonna come in waves, I think. And the closer we get to the budget, the more kind of risk there is for the sterling, especially if we get those kind of articles that we had overnight from the OBR. Then if food prices really come down, maybe a bit. Media is already talking about deflationary pressures after what 100% rise, 5% setback is deflationary. But yeah, I think it's gonna come, and the closer we get, if she doesn't come up with some miracle remedies, I could see the sterling weaken a bit further. It's interesting this level where we stopped, because we just hit the November 2023 high again, and I think that's the one also together with this 50. So this whole 50-65 zone in the euro sterling is the one that we really need to monitor. See there that high in November 2023. Yeah, that one.
Yeah.
So that's the one we tagged again this morning. So this 50-65 is really the zone that we need to monitor. If it can't break in turn, and we are going to hover around in that 7.5 zone probably for a bit longer. But still, I remain of the view that the closer we get to the budget and the least she will be taking like popular decisions. She will have to make some hard decisions that it could still hurt the pound a little bit. What happens afterwards will be decided upon much later.
Yeah. Now, what usually happens with these budgets is we call them trial balloons. So they drop these little hints of what they're going to do, see what the market reaction is. I think the difference this time around is that all these little trial balloons, she's going to have to do them all. So as I say, we could be heading for a situation where she's going to leak out all the really bad news, get the market ready for it, and then that gives her a bit of wriggle room to maybe not go as harsh and see a positive market reaction. So for the pound, we could be in a bit of a sell room of buy fact come the budget, but we'll have to wait and see. There's still plenty of time to see the pound potentially weakening further if we get any more of those trial balloons. And yeah, sorry you got stopped out, Ali, but we are trading different time frames here. Well, I've been building this position or trading this position since July. In readiness of this budget, so slightly different time frames to that. There's still be plenty of pips to be made on the short term anyway, but both me and Kay trade in a slightly different timeline for this one. Right, moving on. Germany's big engineering industry, the VDMA, says European industrial SME sector is dependent on access to raw materials and that permanent magnets are a particular focus. Says the tightening of Chinese export controls on rare earths shows that Europe must become more independent from raw material imports. It says we welcome the EU goal to reduce Europe's dependence on raw material imports from China. There's also been a potential bum fight. Germany's economic minister was due to travel to China or meet up with Chinese counterparts. That meeting has been cancelled. Although no sides are giving too much insight on why. We've got political problems in Spain now, pretty much a mirror image of what's going on in France. The Catalan separatists have broken their, deal with the Spanish socialists, which has left PM Sanchez in a bit of a pickle. He now doesn't have the numbers to pass any legislation. They are also trying to get a budget passed for next year, which now looks in trouble. So looks like maybe some more prime ministers are going to be going through the revolving door. Kate, we should become a recruitment firm for prime ministers. It seems to be the hot jobs market at the moment.
Yeah, why not? I mean, it's a business idea. No problem there. We could make quite a bit of money all across the globe, actually, right?
Yeah, well, we set up an agency, the PM agency, and if we don't like it, we change it to precious metals.
Yeah, exactly.
Right, over at the ECB, we had, I don't think this is on the calendar, but I'll have a look. We had the latest ECB, is it in there? No, it's not. We had the latest ECB inflation forecasts or expectations survey. 1 year inflation expectations coming down to 2.7% from 2.8%. 3 year staying unchanged at 2.5%. So nothing much for the ECB to get their teeth stuck into at their upcoming meeting. We had the Chicago Fed dropping their unemployment rate metric on us. That rose to 4.35 from 4.34. So no real change there. We had a bit of a discussion in our room yesterday as to whether that would include furlough workers, because that number was for October. But it all depends on who's counting and what they're counting within this number. If they're taking a lot of private survey data, that won't necessarily include government jobs. But anyway, some of these regional numbers are all we got out of the US at the moment. The Dallas Fed Manufacturing Activity Index came in at -5 versus -7.8 expected. Let's see if I can find it. There we go. And a prior -8.7. So a little less crappy in the manufacturing sector over there. In Dallas, we also had the Atlanta Fed GDP now coming in for Q3 unchanged at 3.9%. So still nothing showing that there's any wobbles during the shutdown. A couple of auctions passed by without much fuss. 2-year notes and 5-year notes went through pretty okay, so no wobbles being seen there at the moment. We are getting a bit of a pickup in job cuts being announced. Paramount are apparently the latest who are going to knock off 1,000 jobs maybe on Wednesday. There was a piece yesterday from Reuters saying that Amazon plans to cut up to 30,000 corporate jobs. It seems that number's been revised somewhat to 14,000. They're going to cut their overall corporate workforce by 14,000. We had Target, I think it was last week, lopping off some jobs as well. So next week would be jobs week. We're only going to get ADP and keep an eye out for Challenger Great as well, because that's where those layoffs will show up, as well as any others that have been announced as well. So that might be a bit of a hefty number. Keep an eye on that next week. Mexican President Sheinbaum said she spoke with Trump on Saturday and will give it a few more weeks to close the issue of 54 pending trade barriers. Well, how long's a piece of string in terms of a few more weeks? Kay, these talks still going on with Mexico. Mexico peso still glued in the box.
Yeah.
Are these 54 trade barriers going to be important? I mean, or is this just going to be separate to the USMCA stuff?
I mean, if they talk about those, I would assume they're separate from the USMCA thing, because that's a global kind of framework, right? Yeah, the market seems to be a bit reluctant to buy Mexican peso right now, I would say. It doesn't seem completely at ease with stuff that's going on between Mexico and the US. I have not seen the details of those 54 different points that are up for discussion, but we know a lot had to do with drugs and migration, etc. But there is maybe something in there surrounding imports from the China transits, China transformation, etc. Maybe in there as well, which wouldn't be too good for Mexico. But we've seen it's now months since Trump arrives, that Sheinbaum and what's her trade minister or finance minister, Ebrard, yeah, they are doing really their utmost to stay on the right side of the Trump administration. And but the market is not really buying it right now. Yeah, Mexican peso doesn't weaken. It's not weakening, but that may have to do with it being a bit expensive still to be short Mexican peso. But it could move on a single day a couple of percent, of course. But yeah, they're doing their utmost to stay positive. But the market, as I said, doesn't seem to buy it right now. That positive vibes. We also heard from U.S. companies. They can't shut off from Mexican imports, etc. So that's still there. But will Trump go the hard line before scrambling back is now the next question, probably. And I don't know, because there's been all kinds of dates brought up for the revision of the USMCA. Now I think we're already talking about spring next year or so. No, the last one, because I thought it would come up for discussion before the end of the year. But yeah, we won't know for a while. I think this Mexico-US thing.
Yeah, especially with Trump not talking to Canada right at the moment. And we're waiting to see if that changes when he is actually in the same place as Carney at this Haitian summit later on this week. So,
oh yeah. Yeah. Oh, by the way, the headline dropped that Trump and Xi will meet on Thursday.
Okay, cool. So definitely going to meet up there. Yeah, you know what? I'm not. Everyone's a little bit bullish on this meeting, or the market's certainly a little bit bullish on this meeting. I've got a little suspicion that it might not go as well as planned, or it might go as well as planned, but then afterwards we're going to get into some more bum fights. I don't know. I'm getting a bit suspicious of this move in dollar China, the way it's coming. Just all of a sudden they're starting to let it go, and which is all good for your shorts, mate. But
I
yeah, I'm
thought you
just
were
getting.
still with me.
No, I bailed when I was in beginning of October, and I bailed out when that Trump G blow up happened.
Yeah. Okay.
Because I
Okay.
thought, oh, here we go. So I
Yeah.
got out.
I'm with you with the meeting. I mean, if it just stays at the level of signing a TikTok deal, and I buy a few soybeans of you when you don't slap that many tariffs on me, I think if it stays there, maybe I'm going to revisit that dollar China position as well. But yeah, for the time being, they're letting it slip a little bit, which is funny because at the same time, PBOC yesterday said that they would keep ample liquidity, loose monetary policy, yet
Yeah,
there is investment happening into China. We have also seen the Chinese equity markets, people, especially from Asia, it seems, are investing back into China. So they kind of agree with me because one of the reasons why I took this is that I think China will come out on top of this, not having to give too much to the US. But it could be a real damn squid this meeting. As I said, I mean, if it stays at TikTok and soybeans, the market
yeah,
may be disappointed, and then I'm going to look at stuff like metals again.
yeah. I mean, I've just got a growing worry that perhaps China might not be as forthcoming as the market's expecting, and maybe they play a little more hardball, and maybe they're just letting the currency strengthen a little bit to offset what the market reaction will be to that. I don't know. We shall see. The truth will out eventually, hopefully, and we'll find out by the end of the week. But lastly, on the headline front, OPEC Plus is apparently looking towards another modest oil output hike at its meeting on Sunday. A couple of sources coming out from there. So we're either going to get a denial or they're going to confirm that this weekend. Anything else for anything else, Kate?
I think we have covered everything, mate.
Yep, I think we have as well. Right, where should we go from here? So we're on Euro Sterling. We've already done that. Dollar Yen. Yeah, we're going to be looking down. I don't know if I want to buy a dip just yet. I'm still in the same boat with you that we probably should be looking for more weakness. But we've got the Fed, we've got the Bank of Japan, we've got these meetings going on. I think the most likely outcome is just we see a bit of position reduction going into all these events, the market taking some chips off the table. So I think it's going to be a case of take all the scenarios once we know the answers, Kay, and then make a decision.
Yeah, I agree with you. I'm going to let the dollar yen alone. Still a bit still a bit long in euro yen. Yeah, but the dollar is we could see this speculation about yeah, we're going to cut even if it's only 0.25%, but then we're going to end QT, and then the market will likely not want to go overly long dollars into the FOMC. That's where I think we're kind of at. So maybe the dollar yen is not your best instrument if you want to express something, unless you want to be long yen, of course. But okay, we are not in that scenario right now. So we talk about the other side. But yeah, I think if you want to be long yen, I mean, maybe you want to play this dollar yen against that 153 and a quarter, or the other one. And I said it already on face. I mean, if you're really looking at being long yen, maybe stuff like sterling yen is better right now because the sterling is a bit under the cush.
Yeah, they could be set for a decent bounce. Yeah, I mean, let's this Fed meeting should be a dud. So I don't. What we're talking about this time around with trading is not the market positioning for it. It's just looking at, let's get over the hump. If there's no shocks, we can carry on doing what we're doing, as opposed to, you know, trying to get a position in place ahead of an expected outcome. There is very little expected from the Fed at this meeting. They've got no reason to shake the tree. They'll keep things going steady, particularly with the shutdown going on. So yeah, it should pass by. So we're not going to see people positioning into it. It's going to be reducing positions into it in case there's something happens that they're not ready for. So yeah, yields, looking at 10-year yields, they're still hovering around that 4% mark. We're up, we're down, we're up, we're down. No real decision being made yet. And I think where this finishes after the Fed, or where this sits after the Fed, is potentially going to be important for the dollar. If the market doesn't get anything overly dovish or whatever, then we're probably going to see these yields bouncing back up above the 4% and maybe looking to stay there. But that we'll find out tomorrow. Okay, Ali, I'll look at Euro Swiss because I didn't look at it yesterday. It's had a little bit of a setback, which nothing major. We had crept up above this 50-60 level. We're now back, well, somewhat back below it, 55-60 area. So we're not ready to push on up. I want to see it started to hold. I wanted to see it holding for a bit longer than that. But we're still in this uptrend. We've still got these higher lows, still got these higher highs. It is all very short-term stuff. So I've been pretty much taking profit every 10 pips in this one, because I'm not going to. I'm going to take the money while it's there. So if we does see a reverse, that could be a bit dangerous. But we need for it to push on. It needs to be sitting above this level here, and then we can go and take out the or have a crack at the top of the zone there. What else? Not really much going on. Dollar CAD, that's gone a little bit sideways now. We had this little break. I thought it might be going. It tried holding it, but as I said yesterday, no volatility in this break. And then we got back above, and it's starting to hold it. Starting to hold it again, just above that level. So it's not ready to die just yet, and it's putting up a bit of a fist at this level. So again, you have to see what way it wants to sit on, and if you get a lengthy hold below it, that may be the reason why it's going to then head lower. Same old levels in play, 20s, 30s, and then back up to these highs in the 60s. But yeah, a bit more sideways on this one. Right, Kate, I'm going to chuck it over.
Yeah. Just before I move on to the metals, Joao was asking about the sterling Swiss. It's looking like it wants to go lower, mate. We've broken through this low. It's a daily, right? So it's a bit longer term, but it does look it doesn't look good, this one, and that's the problem. Even if Euro Swiss is trading a bit above that major support in the low 92s there. Stuff like sterling Swiss, where the sterling has been under pressure, it's still not looking good. So for this to return higher, you're going to have to start breaking above 106.5 again. For as long as you're below 106.5, there's actually not too much reason to be long, just on the fact of the price action. If you're looking at that sterling Swiss more medium term, that's your magic number, 106.5. Okay. Gold, yeah, and whoever were looking for retracements had it, and it did retrace even more this morning. And as I was already saying yesterday, this is more an issue, of course, price. All right, of course, price, but also time. Okay, when we started to have confirmations about the Trump G meeting being live, Besant going back to negotiate, and Greer going back to negotiate with Chinese officials, it did take away the necessity from that hedge that we have in gold, which has been documented well enough now. We are coming into an interesting zone of support after having broken below this 39.45, which is, by the way, if you look at this is the post, this is the election, the US election, okay? And if you look at the low to the high from past the US election, that 23.6 also comes in at 39.45. So it is an interesting level. Wherever we are going to see bounces also over the course of the next couple of sessions, we keep an eye on that 39.45, whether we get to it, cap around it, go back below also. So this is the first barometer, and it's also that low around here, which we had earlier in October. But for the time being, people are still getting out, I guess, of positions that they had. Other people, and I'm really thinking about the short termers, they must be already short and must have probably sold on the way down, hoping for it to go lower into the meeting. And what I've been saying is that yes, prices are obviously very important, but timing and the result of the meeting between Xi and Trump will now be the next big driver. Okay, of course, it's been volatile, so we can't exclude there's a bit more support here coming in around those prior highs 38.90. We tagged it this morning down to 38.5, which is halfway of the August October ramp higher from where we started here in October after this prolonged period of up and downs and range trading. That's where we started from. Halfway is around 38.5. We can go and see it. We can even go below, but I would start to be very, very careful if we get down somewhere to this 37 and a quarter-ish zone, if we get another move lower. And then, as I said, watch what this meeting is going to bring. If we really stop only at TikTok and a bit of soybeans against tariffs, I would assume that we are going to find the bottom and start to move higher again. That is just what I'm thinking right now. Of course, if we get more, but I doubt it, looking at how the Chinese have been very slow to react to the meeting. It's really the demand comes from the US side more than the Chinese side, I would say. So unless they really come to a stronger agreement than that, and then we're thinking about what's happening in the South Chinese Sea, what's happening with Russia, what's happening in the whole rare earth situation, etc., etc. If they start to get agreements on there, then of course, I mean, this thing is going to drop like a stone, right? But I really very much doubt we are going to get to it. So another leg lower may start to see the end of this correction. Silver is in the same kind of boat. A 10-day or so correction that we had. We are coming into more interesting levels here, as I saw put on my update as well. 45.30 up to 45.90. We did drop inside it, but we also found a little bit of support. The bigger zone to me will come in around here, the really big zone, and it's also levels where other people are looking at, which is somewhere in the 41 bucks, but that's another 10% from where we are. Never say never, but I would start to think shyly that we may see an undershoot here, but then start perhaps to stabilize a little bit and then wait for what that meeting will give us. Okay, sterling cable is not looking great. Euro sterling is bit, as we already discussed. There is, if we would see a bit of more dollar demand coming in, and this 132.90.95 is a bit in danger, I think. We are staying above right now, which is positive, which is just keeping us inside this range. But any more dollar demand, and then I'm maybe not even thinking about today, but into tomorrow, could see a bit of a break below and a wonder below there, because just because the crosses in sterling are suffering a little bit. Sterling is suffering through the crosses. It's not really one where I'm going to try and catch a knife in this one right now. I'd rather see it before. Not saying today, but maybe tomorrow or so. Rather seeing it having another wonder below here. 132.5 is really going to be, if ever we get there, that's going to be a bit of a decision zone, okay? And I was saying on my morning update, it's probably going to decide upon the next 100 points, whether we go down to 131.5 or we go back up to mid 133s to high 133s. In current context, rebounds, maybe 30-35 is a bit close, but anyway, rebounds up to 133, 60, 65. 85 is already a bit of a stretch, I think, in current scenario, but they should likely see a bit of selling going in there. What else are we looking at? Aussie is just very quietly, levels haven't changed, very quietly working on that break. Quite funny is that it jumps from a bit from one train onto another, because commodities are lower, gold is lower, yet Aussie is holding relatively well. I think Bullock has done a pretty decent job of supporting it today, but next night, for us at least, next night we have Australian CPI, okay? And so she's been commenting on that CPI, so watch out the next night. Aussie should take a direction, okay? If we break above 65.75, I think a move into that 66.05 and a 05 to 25 is very much on the cards. But if we start to see misses, she may have to change her tack a little bit, and then we're probably going to retest at least 65.20 and perhaps even get back into that traffic zone that we had before. So watch out for the Aussie in, what is it, about 12 hours or so, a little over 12 hours, 13 hours. That's when the thing will likely be decided for the Aussie dollar. Anything else that we want to look at? Brian, did I forget something or?
No, I think we covered a pretty good swathe of things.
Enough, huh? Yeah, we covered enough. All right, mate, back over to you.
Thank you very much, and thank you everyone for coming to the Flow Show. Thank you again for all my birthday wishes, and hope you have a good day, great day ahead. We'll see you later on Face. Otherwise, we'll see you tomorrow morning. Have a good one.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.